Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. I'd like to offer you some foreign exchange charts today. And the first one I'd like to look at is the euro against the dollar. If we look at this chart, you can see a really nice follow-on high yesterday to the previous session's key reversal up. We also had a first close over some key resistances. Now that's a combination of one, congestion from June 2019 in the 113.60 area, two, the July 2017 to November 2018 head and shoulders neckline, currently at 113.39, and three, the significant 2018 to date downtrend, currently at 113.58, though the downtrend will be resized after this commentary. We now wait to see if we will have consecutive closes over. Today we seem to be steady, seemingly awestruck at quite what has been managed. We now have the opportunity for a series of potential targets on the upside. For the previously off-mentioned diamond bottom, the first potential is at target X around 116.75. I know it's a big ask, but I can only tell you what I see. A further fuller potential would be target X1 in the 117.25 area. Finally, a new potential target X3 on the upside in the 117.40 area. This would be potential for the whole of the last few days' action as a possible bullish halfway hesitation. Overall, there's a long way to go and many things can happen which may derail the move up from the diamond bottom pattern. But that's what it looks like right now. Just watch out that the recent idea of a bullish halfway hesitation does not turn into a double top. Next chart I'd like to look at is cable, aka sterling against the US dollar. Here we have a sort of follow-on high yesterday to the previous session's key reversal up. It was a new recent high, but it was also an indecisive spinning top pattern as well that saw the rise halted by the surprising 38.2% Fibonacci line, the whole of the 2016 move at 128.12. Today, we're seeing the result of that halt with a drop back down below the important long moving average, currently 126.90, and test the lower time, currently 126.63 of the March to May bullish Andrews pitchfork. The market has been using this lower time as an angle of attack higher. The next chart to look at is euro against sterling. A follow-on higher yesterday to the previous session's outside day and a continuation higher today. The market has continued using the super key 50% Fibonacci line for the whole of the 2020 move at 88.89 and the lower time, currently 88.96, of the bullish February to April shift pitchfork as support for this move up. The next chart to look at is US dollar against the Indian rupee. A key break upwards today above the combination of the March to April 50% Fibonacci line at 75.67, as well as the April-based downtrend currently at 75.60. This is the first break out of the descending triangle pattern formed since late April. The question now is whether this is a false break or not. Next topside resistance, well, they are the short stroke medium moving average, currently at 75.82, and the very recent 50% Fibonacci line at 75.96. This also fits in well with the idea I mentioned 5 weeks ago of the action from March to date being an inverted ascending scallop pattern. The final chart to look at is the US dollar against the Brazilian real. A second small bullish white soldier yesterday and continued counter to the recent bearishness. Yesterday's pullback went as far as the combined key late March low at 496.96 and the 50% Fibonacci line of the October 2019 to May 2020 move at 496.61. However, prices did not manage to test the medium moving average overhead, currently at 501.41. This puts a small question mark against the large bearish bump and run reversal pattern of which I've spoken about at length. Potential on the downside would be an initial target X in the 471 area with an optimal target X1 in the 442 area. Well, that about wraps it up. So in the meantime, good trading and stay safe in the markets and in real life.